Good evening. It's the start of a new week. You're watching The Big Story, where we discuss the hottest topics of the day. I'm Olivia Quay, coming to you live from the Straits Times newsroom. Now, due to a weakened outlook after the coronavirus outbreak, the Ministry of Trade and Industry today downgraded its economic growth forecast to between minus 0.5 and 1.5%, this indicating a possible recession. For Trade and Industry, Gabriel Lim, said the last time Singapore suffered a recession was in 2001, when the full-year GDP contracted by about 1%. But this time, the ministry estimates GDP growth to come in at about 0.5%, which is the midpoint of the forecast range. To break this all down, I'm joined by Poon Chian Hui, Deputy Business Editor at the Straits Times. Chian Hui, thanks so much for joining us. Now, first of all, what are the main contributing factors to this downgrade? Is it primarily because of the coronavirus outbreak?
I would think so, yes. Back in November, the ministry actually released its forecast for 2020. However, it was a notch higher at 0.5 to 2.5%. That was before the virus outbreak took hold. So ever since then, I believe that it's because markets such as China and affected economies would see a dampened demand. And therefore, today, it resulted in the downgrading of the GDP forecast.
I see.
However, I think on the other hand, we continue to see some challenges from the global economy. So US-China trade relations still remain uncertain, and as well as the Middle East conflict.
Right. So which sectors do you think would be the worst hit by the weaker by the weaker growth outlook?
So far, I would think that the immediate sectors would be on three fronts. The first front would be what we call the outward-oriented sectors. So this would mean your manufacturing industries and wholesale trade industries who export goods out of Singapore. They have been affected because the factories in China have closed for a prolonged period, and the workers are also not returning back to work. The second part would be the tourism industry. Because of the drop in arrivals to Singapore, hotels, travel agents, they have all been hit, and therefore, there's a lot of repercussions in the market because it leads to the third factor, which is domestic consumption. People are afraid to go out and do shopping or dine. So in the end, our retail and F&B would also be affected by this situation.
Well, there is a silver lining, if you can call it that, because according to MTI's Permanent Secretary Gabriel Lim, he said there are pockets of relative strength in the Singapore economy, like the construction sector and the information and communication sector as well. So why do you think these sectors are more resilient?
For construction, it actually had a rebound that was can be traced back to 2018, where there's a sort of fresh pipeline of projects, and they are currently underway, therefore generating continued activity in the construction sector up till now. As for the Infocom industry, efforts in digitalization has also led to a greater demand in IT capabilities. So fueling, the expertise in this area continue to gain income as well.
Right. Any other sectors you can identify that, would not be so badly affected?
I believe currently, real estate has not really seen a big hit on, in fact. But it's really hard to say because we have also had reports that it could affect show flats attendance down the line.
Right, okay. Well, Mr. Lim also threw back to the SARS outbreak of 2003 when the economy shrank by 0.3% in the second quarter, but growth bounced back to record a 5.3% expansion in Q3. So I guess, best case scenario, do you expect things to follow a similar route?
Well, although I could maybe speak for all of us that we hope that it will improve.
Of course, yeah.
However, the situation is evolving very quickly every day, and it really depends on how quickly the spread can be controlled. So even during SARS, as you had pointed out, we did not really enter negative territory in terms of GDP. It was only back in 2001 that we had the previous recession, and that was largely driven by the dot-com bust. Yeah.
Right. So for people like you and me, the average person, what do we need to prepare for in light of a possible recession? Are we going to see job cuts, layoffs?
Well, the good news is we haven't really seen right now any reports of layoffs. In fact, we did see some private sector companies stepping up to offer, funds or assistance to help the smaller companies tide over this rough patch. Much will also perhaps depend on, the upcoming budget statement and the kind of help that it can give to Singaporeans.
Speaking of, the budget statement is tomorrow, and Finance Minister Heng Swee Keat already said that we can expect a cost of living package, tax rebates. So in light of this downgrade, do you think we can expect further reassurance from Minister Heng tomorrow?
Much attention, I believe, on the budget would really, people want to see, what the budget can give in terms of supporting Singaporeans and Singapore companies. Although the coronavirus outbreak would be, foremost in many people's minds, the budget should also have a longer term, outlook to bolster our economy, for many years ahead, and not just this road bump. So we do look forward to the budget tomorrow.
All right, let's see what happens. Thanks, Chian Hui. That was Deputy Business Editor Poon Chian Hui speaking about the downgrading of Singapore's growth forecast for 2020 to between -0.5% to 1.5%. And you can read all about it at straitstimes.com.